Short interest is extremely elevated for Carvana right now, which may cause a short squeeze for the stock. In this video, I'm going to explain my thesis for why Carvana could be set to have a short squeeze over the coming weeks based on my fundamental and technical analysis. First off, this is not financial advice, so do your own research. Carvana has a short interest of 61% when you consider that as a percent of float. And this number is very high compared to Carvana's history. As you can see, it was really only this high back in 2020, late 2020, early 2023, and really hasn't been this high, in since past 2021. So and this was in the teens in early 2022, right? And early 22, what happened? Shares obviously fell 96% over the year. Short interest as a percent of shares outstanding is also pretty high, which is about 43%. And as you can see, that's well above historical levels. So this really all tells me that short interest in the stock is a bit overextended for Carvana, which, in my humble opinion, could lead to a short squeeze over the coming weeks, especially when you consider the technicals and more fundamentals, which I'll go into right now. So, first off, this is kind of surprising. Carvana is actually given a A- rating in terms of valuation on Seeking Alpha's site, and basically these ratings just put valuation relative to the peers. And as you can see, the EV to sales numbers and the price to sales numbers are all pretty healthy and well below the peers, which is a good sign in this metric. So the price to sales metric is 93% below peers, and the EV to sales is about 45 to 33% below peers. So that's a pretty good sign there. Obviously, the company doesn't make money, but I did want to point out this one trend I was seeing in terms of earnings relative to expectations. So in Q4, the company beat EPS expectations by 57%. This is the first beat in 6 quarters, as over the past 5 quarters, the company has reported EPS below expectations. And really, the market is just a chart of expectations, right? At the end of the day, it's not all about results, it's about results relative to expectations. So to see a beat and a surprise is definitely a good sign for the stock. And when you consider what has happened back in 2020, so in 2020, from August on, we had 5 quarters of, expectations of being below where the company actually reported. So Carvana obviously beating expectations for 5 quarters straight in 2022 into 2021. Obviously, we wish we could all go back to 2022 with how the stock performed. So really good to see this kind of negative trend in EPS reverse. And when it had reversed back in 2020, obviously the stock, showed that with tremendous performance. So speaking of performance, let's take a look at the technical side of things, which can really help guide us here. So Carvana had its 50-day cross above the 100-day moving average, which signifies bullish short-term momentum. The last time the 50-day crossed above the 100-day moving average was July of 2021. And when this happened, the stock did rise about 15% over the coming month or so. Interestingly, though, a little more interestingly, back in 2020, when this 50-day moving average crossed above the 100-day moving average, in the preceding 230 trading days, the stock moved 177%. So this definitely does affect the stock. So I wanted to point that out, just basically laying this out that, this has positively affected the stock in the past. And obviously back here, 177% move is, pretty significant. And also the stock in late March, and I'll zoom in here to kind of show more of the short-term price action. So in late March, the stock came down to test this support level around 660, 650, which is where shares had bottomed out in January and also in November. So we're above this support level. The support level looks like it should hold. We're getting this bullish sign in terms of momentum. All this kind of lines up and says, the bottom could be in for Carvana. And when you look at where the stock kind of IPO'd at, it's right around, it's not right around, but it's relatively around these levels. Obviously, it bottomed out probably about $8. So not right there quite yet, but, definitely within sneezing distance here, especially given how volatile the stock is. Therefore, we're seeing short interest very high, especially when you consider historically for Carvana. And we're seeing, that shift in EPS, finally a beat, which is a great sign. And the technicals seem to be turning the corner here. All this leads me to believe that Carvana could see a significant move up over the coming months, especially given the stock has outperformed the general market since late January. So if the market continues to move higher, which the technicals are pointing that way, this stock could continue to outperform and do very well. So I'll end the video there. If you like the video, please give it a like and subscribe to our channel. If you would like to receive my daily portfolio moves, my exits, my entry points, you can join the Discord, which is linked below. Also, if you would like to get our daily stock market update letter that I send out every morning, you can sign up at opportunistictrades.com for completely free. Good luck, everyone. Happy trading. Peace.